So the White House, the Biden-Harris administration announces actions to lower housing costs and boost supply with the stroke of the pen. Matt, what? I'm skeptical. Are we doing anything here? Is it good?
Well, it's not
changes.
It's not too radical. As much.
They've made a lot of statements about housing.
That's
what has been done about housing.
This continues the efforts, plans, announcement, messages, missives, memos.
That's exactly what it says.
There's guidance too.
No,
but they have been, they have been talking about this a long time, and even in the very early stages, I said it's worth watching this because it could have teeth and it could move things in a way that maybe a local government couldn't, but in
what sources? Oh, they're using the Fred sources.
But I do think it is, it's worth just signaling, all right, this is the direction. So this is something that you might be able to expect. And the three things they signal out are reducing barriers to build housing, like restrictive and costly land use and zoning rules. The second is expanding financing for affordable, energy efficient, and resilient housing. And then the third is promoting commercial to residential conversion opportunities, particularly for affordable and zero emissions housing. Now, to go back to that.
Can I stop you?
Yeah,
I mean, we're going to talk about it, Matt, but like, if again, like because we've dug into this, this is for me, like, this is evidence that like of how serious or non-serious this plan is, because we all know how a drop in the bucket that these conversions could make. And so if this is the third leg of the strategy for housing, I don't have a lot of faith in the rest of it, Matt. But
I almost brought a bucket to this and tried to get an eyedropper and then and drop us like, this is what it means.
Just don't even do
because they were kind of bragging about having converted 1,000 units from office to residential, or some other thing to residential. So 1,000 units were added, which is that's 1,000. That's not that much in the scheme of things. And the fact that the White House
across the United States
is like, that's crazy that they wrote that down. It's like, I bought a house yesterday. It was my cat's birthday yesterday. That's the kind of importance.
You reach out for comment?
No, and I also don't have a cat, but I will reach out for comment, and I hope they get back to me. Fannie,
what is answer me this, Matt?
Yes.
Press briefing.
Yeah.
Obviously, relative to the Greer Report and Greer Report listeners, like, will you have to like fill out a contact form? How do we get into the briefing room?
That's a good point. I will chase that down, and if I don't have a little lanyard and a little label, and I'll be raising my hand.
I mean, some of those guys, they've got some pretty obscure outlets in there.
Right.
And
I think fill out the right paperwork. So
yeah, I think that we've got a lot more legitimacy than some of these outlets. I mean, we're the leading source of commercial real estate.
We can be friendly.
Yeah,
I don't have to be a jerk in there.
No, I know. You'd be. I have no doubt that you'd be incredibly cordial. That's why I'm bringing it up. So anyway, we'll give an update when the White House has reach back.
Yeah, because, and then along with those 1,000 units, they're also announced new funding to produce research on office to residential conversions, including producing a new guide for policymakers.
The White House is going to put a guide together?
That's right.
Or is it HUD's going to put it together?
Yeah, I think HUD's doing it. But that's the material, the deliverable really is a guide for this. But there were other things like a $27 billion greenhouse gas reduction fund, which will provide financing for thousands of clean energy projects. So, funding, green buildings or what have you. But I do think that this other part, this HUD announced new guidelines that increase the dollar amount threshold at which a multifamily loan is considered a large loan and is subject to additional underwriting requirements. So they raised that from 75 million to 120 million.
Ding, ding. That actually is very interesting, Matt. And of all, jokes aside,
that's the circle. I'm circling that.
If you are an apartment investor or multifamily, syndicator, that's something to be paying attention to. Yeah. Maybe you're not doing deals that big, but this is important. We've run into this a handful of times in some of our bigger deals when we were going the HUD route. Well, obviously, not all the details are here. I guess we can read some of the headline, the guidelines, guidelines. But a lot of it comes to there's a they bundle these loans together, these Ginnie Mae loans, which are used to finance at least the HUD deals that I'm familiar with. Yeah, the 223F. There's a lot of different types of HUD loans. But sometimes, they put them, they batch them together into these blocks, and if a deal's too big, it kind of like doesn't fit in.
Okay.
And so it can be hard to kind of to securitize it all.
Oh, interesting.
And so I don't know if that has something to do with it, because you'd think that like usually the deal gets bigger, it's easier to underwrite.
Yeah.
Which is I guess a little counterintuitive because you think it's more money, but this is really great because there's most assets are not going to fall into this category.
But I bet it has a knock-on effect if certain players are not subject to these underwriting requirements in certain situations that may change the kind of deals that they go after or the ways that they do business, that could affect people pursuing smaller deals.
Yeah.
I could see that. And, if it does have the intended effect of encouraging more housing, which is all of this is to the point of this is to build more housing. So
and taking down the barriers, and it's like, hey, I'm going to do a big development, and they're like, oh, you're going to build how much housing? No, let's do it. All of a sudden, you're encouraging smaller developments.
Yeah,
which, I just like them to get out of the way in general. But
yeah,
but if they are guaranteeing this very fancy debt that makes it the most accretive, it's a double-edged sword. I think that a lot of operators have mixed emotions on kind of getting in bed, working with the government in terms of the debt, but it also makes the multifamily sector that much more attractive because you do have this government insured, essentially backed financing that is more readily available, is much more consistent. It makes it a great asset class. But you're also, anytime you're dealing with the federal government, administrations can change, opinions can change, and rules and regulations can be changed by fiat.
That's a good point. Yeah.
And having such a large market share that can really move things. Right now, between agencies, different types of FHA loan programs, so it's Fannie, Freddie, HUD, makes up more than 50% of the multifamily debt space. So, which again, it's great, but you get what you pay for.
Yeah, and I think a little bit has insulated it from, in a way that office is a little less insulated, for its own reasons.
Yeah, no, for sure. Yeah, well, offices on all floating rate. Shorter term, higher rates. Yeah. Sorry.
No.
All right. Anything else, Matt, on the White House?
No, and I think what you said about the kind of transience of administrations, and the fact that this has taken 2 years to get here, it does. So take this with a little grain of salt.
Yeah.
But this is a trajectory, so we could see more bigger actions in the future. But I think the most important material takeaway was this new guidelines that increase the dollar amount threshold for large loans.
Awesome.
Makes it a little easier. So that's great.